significantly, rising from Kenya shillings 393.1 billion, which is equivalent to 2.9% of GDP in 2022, to 510.6 billion, which is equivalent to 3.4% of GDP in 2023. To reverse this trend, the Finance Bill of 2025 proposes reforms to rationalize tax expenditures so as to promote equity, fairness, efficiency, and reduce distortions within the tax system. The proposed reforms are in line with the national tax policy and the medium-term revenue strategy, which this Honorable House passed. So, Mr. Speaker, from the proposed reforms, we expect to raise Kenya shillings 30 billion more as additional revenue. Mr. Speaker, customs measures agreed upon by East African community ministers during the pre-budget meeting are intended to protect our industries and ensure they access raw materials and inputs at affordable prices. The meeting allowed Kenya to import tea packaging materials at a lower duty rate of 10%. In addition, Kenya was granted an extension of duty remission to import wheat at the rate of 10%. These measures will support our wheat and tea farmers. Mr. Speaker, I will begin with the customs measures and later provide highlights on the proposed amendments of tax laws in the Finance Bill of 2025. On customs measures, to meet the local demand of rice, Kenya was allowed to extend the stay of application on the East African Community Common External Tariff and import rice at the rate of 35% or USD 200 per metric ton, whichever is higher, instead of the common external tariff rate of 75% or USD 345 per metric ton. Mindful of wheat farmers in Kenya, East African community ministers agreed on duty remission of wheat at a rate of 10% instead of the common external tariff rate of 35%, provided the millers who intend to import wheat under the duty remission must first purchase locally produced wheat. Mr. Speaker, to promote local assembly of telecommunication equipment, Kenya was granted an extension of duty remission on inputs for assembly of telecommunication devices, including mobile phones, laptops, and tablets. Mr. Speaker, in order to reduce the production cost of animal feeds, Kenya requested for an extension to import inputs for production of animal feeds duty-free under the East African Community Duty Remission Scheme, which was granted. We urge the producers of animal feeds to apply for the remission. Mr. Speaker, the leather sector is one of the priority value chains under BETA. To support local producers of leather and leather products, Kenya was allowed to extend the stay of application on the common external tariff rate and apply import duty rate of 35% on leather products. To promote tanneries to supply local manufacturers with high-quality leather, Kenya was allowed to import chemicals for leather processing under duty remission. Mr. Speaker, to support local assembly of transformers, which is critical to energy distribution, the East African community ministers approved Kenya's request for a tariff split on transformers to provide for a distinction between fully built and unassembled transformers. Currently, it is one line, tariff line, and it is very difficult for us to separate and incentivize either of them. So, Mr. Speaker, to support the local assemblers of cranes, Kenya was granted approval to import inputs for assembly of cranes duty-free under duty remission. Mr. Speaker, last year Kenya was granted a stay of application on the East African East African Community Common External Tariff to apply a higher duty rate ranging from 25 to 35% on certain types of paper used in manufacturing packaging materials. This action adversely affected exporters, particularly in tea sector. To address this, Kenya opted not to request for an extension of the stay of this common external tariff. And this decision will not affect local manufacturers of packaging materials as they will continue importing raw materials under duty remission. So, Mr. Speaker, now let me speak to the Finance Bill of 2025. Let me now highlight some of the proposals contained in the proposed Finance Bill 2025. under Income Tax Act. Mr. Speaker, to enable faster recovery of investment by businesses on loose items such as utensils, linen, and industrial tools, the bill proposes to amend the Income Tax Act to allow for a full cost deduction of these items in the first year of purchase, as opposed to the current 3 years. This will improve cash flows of the relevant businesses. Mr. Speaker, we have noted increased tax disputes arising from audits carried on cross-border transactions. These disputes could have been avoided if the multinational companies had advanced pricing agreements with the commissioner at KRA. To address this gap, the bill is proposes to amend the Income Tax Act to empower the commissioner to enter into advanced pricing agreements with multinational companies. Mr. Speaker, the Tax Laws Amendment Act of 2024, passed in December last year, introduced the minimum top-up tax in line with global best practices. But the Act inadvertently omitted the due date for payment of the tax, thus creating enforcement challenges. To address this, I have proposed an amendment to the Income Tax Act to clarify that the due date will be the end of the 4th month following the close of a company's accounting period. Mr. Speaker, again, the Tax Laws Amendment Act of 2024, passed in December last year, exempted gratuity payments from income tax, actually pension and gratuity. However, the provision is not clear whether all gratuity, including from private pension schemes, is exempted from tax. In this respect, the bill is proposing to amend the Income Tax Act to clarify that all gratuity payments, whether from